Welcome back, welcome back, welcome back. It's been a few weeks, but hey, today we are back, and it's great to have everyone locking in again, listening to what we want to share. Because the topics that we're going to discuss are very essential, very vital, and sometimes it may be a tough conversation, but it's definitely needed. But before we get started, I want to say good day to you, brother Larry, better known as Call Larry. How are you doing?
Man, I'm doing good. It's a beautiful day in the neighborhood. Yes, sir.
Well, good, good. How's the community? How's the family?
Family is doing great. Community is doing awesome. We're so excited, especially like I said, the weather, man. This September weather. I was talking to my wife. I said, baby, you know what? I think I like September and April. Now I'm a little bit biased towards April because April is my birth month, but I also love the weather as well. Yes, sir.
Absolutely, absolutely. Well, Larry, I want to go ahead and get started. And we're going to talk about pretty much insurance, and uh, we're going to present insurance in a non-confrontational manner. Today, we want to get started. We want to use a biblical verse, Proverbs 13:22, if that's okay with you.
Very okay with me.
All right, good. Pretty much, Proverbs 13:22 reads, "A good man leaves an inheritance to his children's children." And so we want to relate that to what we're going to talk about: insurance. And so first, we want to start off. Last time you and I spoke, we talked about your journey from down south Louisiana to up north Louisiana. When I say down south Louisiana, below Interstate 10.
Right.
And you and I, we just read an article. We were presented with an article in reference to something that you possibly were affected with, or if not you, your neighbors or your neighbors' neighbors. And we want to tie that into Proverbs 13:22 because, as I mentioned, and as you know, I want to read this again for the people: a good man leaves an inheritance to his children's children. So in
Mhm.
society, we normally leave some type of inheritance through home ownership. And
Right.
so a person would purchase a home, and through building equity in the home, they would end up leaving this to the next generation, or maybe build equity in the home so they could borrow down on that equity in the home, possibly start a business or education, sending their children to school. But you and I just read an article where, in order to protect that home, we purchased something that's called insurance, property insurance, and
That's right.
your root comes from property insurance, and so you understand how essential it is to property insurance. And I'm gonna
Yes.
pull you into this conversation, but the article indicated that there was an insurance company that ended up dropping thousands and thousands and thousands
Hmm.
of individuals off
Hmm.
this insurance plan after they were devastated with a act of Mother Nature, man. So let's talk about that. When you hear something like that, as a godly man, as a man in the community, and as an insurance guy, what mind frame does that put you in?
You know what? It puts me in the place of insecurity. Just like thousands of people throughout the state of Louisiana. As you mentioned, I'm from down south, originally from New Orleans, and it just brings back memories of Hurricane Katrina. How everybody was very anxiety. There was in panic mode. They didn't know what to do. You had whole insurance companies leaving the state of Louisiana saying, hey, I'm no longer going to do business in the state anymore. And now we'll have that happen again. Before the hurricane season came, we have many insurers saying the same thing. You know what? We're going to cancel policies. We're pulling out and things of that nature. So it brings back memory once again of the anxiety, panic mode that we had many years ago.
Okay. So let's break that down a little bit or dig a little bit deeper. So when a individual is attempting to do what is, uh, I guess, humanly correct by protecting themselves and their family with insurance, but
Mhm.
then the Mother Nature presents us with some challenges, and now the insurance company decides to pull out, and so that puts a family or individual in a position where if they can actually find insurance, or I'm hearing that some yearly premiums are now
Yeah, yeah,
20,000, forty
hmm,
thousand dollars per year, and
yeah,
the average median income in Louisiana is around the high 30s or low 40s. That's a
right.
person's yearly salary. how can a person actually even conceive uh, paying those kind of premiums?
You know what? They cannot. And it causes a lot of people to make the decision not to even have insurance at all. And that poses another problem because a lot of people are still paying notes on their homes, and part of the requirements of having a mortgage is to have hazardous insurance. So it's a real terrible thing. We had three companies, to decide to make that decision. And as you know, Louisiana has its own insurer, which many us agents know as the last resort. They stepped in, but like you said, those premiums, they're out of the water. I mean, 15,000, 41,000, for just something that you would be paying only $1,200 a year for. Yeah.
And so this makes me think of, Larry, you've been in the insurance industry for a period of time. I've been in the insurance industry for a number of years. This is why this is so important to have this conversation. And
Yes.
especially as an insurance agent, we attempt to inform our clients it's time to have what is called a yearly insurance review. Now, the insurance review can present so many challenges, but also so many benefits to having an insurance review. Do you, in your professional opinion, do you recommend individuals having a yearly insurance review?
I totally recommend it because, one thing about life, it changes. That's when you're living because there's changes. So what does that mean? When we have a review, we could talk about changes. You may not need what you needed before, or you may need more than what you have right now. So let's review and make sure that you have the proper insurance to fit your needs.
That's right. That's right. And that's what I share with people. Insurance is like a good pair of leather shoes. Now, your shoes may not fit me, my shoes may not fit you, but I want to get the proper pair of shoes so it can support my back. It's good looking, it's affordable, but it has to fit me. And so
Yes.
that is one of the benefits of insurance. And the only way to actually really dig deeper and uncover anything and ensure that it's still meeting today's needs, because most people acquire insurance maybe 5 years ago, 10 years ago, but
Yeah.
needs change, similar to gasoline prices. We just went across this, the first part of the new year. And so
Right.
now rates are going, prices are going down a little bit, but tomorrow could bring something different. That's why it's so important to create a relationship with your insurance agent, because
Yes.
needs change, families grow, financial needs changes, and it's so important. So and want to keep the people get them a friendly reminder, Proverbs 13:22. But Larry, what else could we add on to, because you come from the actual PNC side originally, when it comes to not only protecting a person's home, where there's renters insurance, homeowners insurance, auto, business, but when it comes to PNC, is there anything that you would like to add on to that conversation?
Yes. I mean, one of the words that I learned when I first got into the business was the word indemnification, or to indemnify. And what that means is to bring an individual back to the place where they were before the loss, before the peril, or what have you. So it's very important to have property insurance and even liability insurance, because that particular insurance is going to bring you back to the place that you were before you lost everything, or even a small bit of something. So I really encourage, everyone to have some type of insurance. And just I want to jump also to the scripture that you talked about. A wise man leaves an inheritance to his children's children. I normally use that scripture, for the life insurance portion, but I love the way that you brought it up on how when you have home ownership, you're actually leaving that to your family, real estate. You're leaving that to your family as well. And I just like the way that insurance can not only be assurance, but it can be a blessed insurance as well. I tell my clients, they laugh at me. I say, hey, it's good to have a blessed assurance, but it's also good to have a blessed insurance.
I
Yes, sir.
like that. I like assurance, and also insurance. I'm gonna
Yeah.
write that down and use that, man. That ties into it, and it makes sense.
Yeah.
And
Yeah.
ultimately, you and I, we've been through the insurance training, and they equate that to the most simplest term about a peace of mind.
Yes.
And that's what we seek for each and every day, a peace of mind. And so
Absolutely.
Proverbs 13:22, a wise man leaves an inheritance to his children's children. And it's not easy. It's not done overnight. It takes discipline. It takes
Right.
knowledge. And the only way to do that, you definitely have to sit down with a professional that can truly advise you and I in reference
Yes.
to our current needs. And it's needed. So we're talking about PNC. We want to shift this real quickly in reference to life insurance. And some people get nervous and scary when we talk about life insurance. But we want to talk about today, as you just presented, we want to talk about a financial tool that can give an individual and an individual's family assurance. So let's talk
Yes.
about that. We want to
Mhm.
talk about a financial planning tool that is needed. And so with me, I've been in the business over 10 years, and
Uh-huh.
I still get confused sometimes on the different types of assurance plans. And we're
Hmm.
talking about life insurance. And
Yes.
the most general topic is going to be term insurance and also whole life insurance. So I was
Right.
hoping that if I can pull on you with your professionalism to really share with us what is term insurance and also the difference between whole life insurance, if you don't mind.
Very good. So, term insurance speaks for itself. It's for a term. Now, that can be a 10-year term, a 15-year term, a 20-year term, or even a 30-year term. But after that term, something is going to happen. Now, the policy can terminate, which means it's over with, it's gone, or the good price that you had 10 years ago, 20 years ago, 30 years ago, that can terminate and now increase. So once again, term insurance speaks for itself. Is for a term. There's no bells and whistles per se to it. You can have riders, you can have built-in riders, but it's just death benefit uh, for your family, for your beneficiary in case of a loss. Now, whole life insurance has a little bit more to it. It's for your whole life. You're paying the same premium for your whole life, as well as the policy sticks and stay for your whole life. So it's a whole life insurance policy. Another feature of the whole life policy is cash value. This is kind of like a built-in savings account in a sense. Some people look at it as an investment product. It's not meant to be an investment product, but with the right policy, with the right agent, with the right company, you can actually use it for that to a degree. It becomes a supplement to your retirement, or you can have a goal, say, hey, I'm gonna have this policy. If something were to happen to me, my beneficiaries is gonna get the death benefit. But if I live, guess what? Now I have 10,000, 20,000, 50,000, 100,000 plus in my cash value, and I'm gonna use that for myself. I'm gonna stop right there and see if you have some questions on that.
I do. I do. I just
Yeah.
want to break down a few terms that we use.
Yes.
So I want to go back to that term insurance. And like I said, I'm learning so much from you. So when you mention term, so the terms can be in different numbers, 5 year, 10 year, 20
Mhm.
year. And so, but eventually it's going to terminate. Now the premiums, will the premium stay the same once it terminates and you get the next policy, or how does that work?
Very good question. So, most insurers give you a level term, which means the premiums stay level, they don't increase or decrease. But you can actually purchase policies where it's increasing premium, decreasing coverage, increasing coverage. It all depends upon the company as well as your policy. That's why it's good to have a review to make sure what type of policy you have. But once again, once the policy reaches its term, it can cancel, which means terminate, or the premiums can change. They will change. They will go up after that term period. So if you have a 10-year term, just rest assured something's going to happen, when that 10 years is over with. Either the policy will cancel, or you will get a letter from your insurer saying, instead of the $50 a month that you were paying, Now it's $75 a month, or it can be $120 a month. It will increase. And for some people, it doubles and even triples.
Okay. Oh, okay.
Yeah.
And also on the reverse of that term, at the end of that term, and it terminates the face value amount, there's a possibility. And as you mentioned, that's why it's so important to get the insurance review.
Yes.
The face value could decrease as well.
Yeah.
That's a possibility. Okay.
It is. And then just quickly add this in, and it's based on the company. I mean, you and I were independent agents. We've learned one thing from one company, then we go to another company and they say, we can do this. And you're like, well, that company couldn't do this. And they say, nobody can do this, but they can do this. So, it's very important, once again, to pay attention to your policies. It's very important to get education. It's very important to ask a lot of questions to your agent or to individuals like myself and yourself, that have been in the industry for a long time. We're willing as well to answer questions and give that value added service even to prospects.
Yes, sir. Thank you. You're right about that. And also dealing with term insurance, you mentioned you use something called a rider. Mm-hmm. Can you explain that? What is a rider?
Very good. Very good. And, I'm a word man. So
right. I'm just breaking it down because I know what you're saying, but I want the people to know.
Absolutely. A rider rides along, with the policy. And of course, we're educating the community on this. A rider is not a separate policy, but it's a feature to the policy that rides along with the main policy. So we have, for instance, a children's rider. You may have children under the age of 17 that you don't necessarily want to get their own policy right now. You want to save some money or what have you, and you can help them and allow them, shall I say, to be a rider on your policy. Now, there's limitations to riders. I mean, they're not their own in itself. So, for instance, a children's rider, it may cover the child up to age 26 or when they're married. Another limitation of a children's rider, it may also only cover them to a certain face amount. Some companies is 5,000, other companies is 10,000, and there's also companies that have 25,000. So there's many riders that you can add to your policy. Riders are actually good. They're not totally limited. They're good. That's the chronic illness rider. That's the critical illness rider. That's the terminal illness rider, the accelerated death benefit rider. There's so many different riders that you can add to your policy, and it actually helps you to kind of consolidate that insurance and assurance in one place.
Yeah, and that's so important, as you mentioned. Yes. It's so important to seek out a insurance review, because on the PNC side, we call it, you get your basic policy, then you can get something that will cover everything called an umbrella policy.
Come on. Yeah.
And so same thing when it comes to life insurance, riders can add on to your basic policy, but you have to get the basic policy first to get the extras that come with it.
That's right.
Yeah. So let's talk about whole life real quick. We mentioned about premiums, and we also mentioned about cash value. Let's talk a little bit more about this thing called cash value. So are you saying that with a whole life policy and the cash value, is it building up a savings plan, or is it building up extra cash that I could just go in and just pull out? So let's talk about that a little bit.
Yeah, so this cash value, and once again, it varies with different companies. For most of your mutual companies, these companies may offer more cash value, because what they do is when they have a surplus, when they have a great year, a surplus, instead of them taking that money and putting it into the stock market per se, they take it and put it back to the policy holders, the policy owners, because it's a mutual company. So you can take that money, that thing called a dividend, and you can actually add it to your policy, which helps your cash value to grow even more. Most cash value policies is based off of interest, not necessarily by the stock market or anything like that, but an interest that the company itself set. Some of them may be 4%, some may be 6% or whatever. So that's a very good growth rate, in my opinion, especially compared to a CD or a savings account, and things of that nature. We do understand that there's a lot of controversy regarding whole life and the cash value. One is because the premiums are a lot more than a term policy, and there's some companies, as you and I know, they use that as their fuel, or what have you, to encourage their clients to come over to them. But at the end of the day, all of these policies, they fit somewhere and they're a great fit to someone. So at the end of the day, we as agents, we have to make sure that we find out the need of the client and even the desire of the client, and then we offer the product that they need and even desire. So going back to the cash value part, it grows. I mean, you have the option to go into it and take a portion out. You can get a loan, if you please, with the intent of paying it back, or you can take a portion out and say, hey, I'm not paying it back. And what happens is that takes away from the cash value, but it also takes away from the death benefit. If you were to pass away, your family would only receive minus what you took out on the cash value. I want to add one more thing to that. Now, if you take all the cash out, now you have surrendered your policy. You're saying, hey, forget my beneficiary. I'm going to take this $5,000 out of this cash value. And now you have surrendered the policy. There's no more policy anymore. So I would advise and urge anyone, if you want to keep your life insurance policy, don't take all of the cash out, just take a portion out. Yes, sir.
Okay. Well, thank you. They broke that down. And can an individual own more than one insurance policy?
Yes, sir. Yes, sir. You can own as many policies as you can afford.
Okay.
Yep. There's no cap on insurance policies. That's awesome.
All right.
Yep.
All right. Well, good. We definitely was able to hopefully touch some lives dealing with that, breaking it down, relating to Proverbs 13:22. A wise man leaves an inheritance to his children's children. And so it takes a lot of planning in regard to that. But Larry, go ahead and before we get out of here, I'll give you the last few words. Let the people know who you are professionally and also how to get in contact with you.
Okay, very good. Once again, my name is Larry Bell Jr. I'm the owner of Bell Insurance Group and Associates. We go by the abbreviation BIG. We do it big over here. We encourage our clients to also do it big by doing business with us and also thinking big, because there's more to life from where you're at, and so on and so forth. You can also reach me at 318-512-2242. You can look up Larry Bell on all the social media outlets. I don't think I'm on Snapchat or anything like that yet. I'm kind of old, But with that said, you guys can just search me, as the people, the young folks say, you can Google me or what have you. But Buy Life Insurance Now, LLC, or Bell Insurance Group and Associates. We're excited to serve you, to provide products to you, or simply just educate you.
Absolutely. Sounds good. Hey, and that's and you know who I am. I'm Brother Brian, and I operate Easy Insurance Agency right here in Ouachita Parish. So other than that, Larry, there's nothing else. We'll go ahead and give the people a break until the next time we visit with them again.
Thank you.